We've always been taught that lower dollars equals lower risk. I'm about to bust a hole in that logic. When you are looking at buying a firm, it is natural, it's human tendency for us to kind of feel like, oh, I would really love to kind of dip my toe in. It would be great if I could find a $100,000 revenue type of firm, acquisition price, maybe 75 grand. It's natural for us, especially numbers people, to think that is going to lower my risk. However, the problem is most of us aren't thinking about all the other things that are involved in an acquisition. See, when I go by accounting firms, the way I teach people in my community, which, by the way, if you are interested in chatting about joining that community, there's a link down in the description. You can click it, book a call. We can chat about it a little bit more. But the way I teach buying an accounting firm is that we want to buy an accounting firm with established systems and processes and established staff in place. That is going to be the whole key of this is our fundamental principle here of not buying a job and buying a business. Because look, most of you guys either have your own firm or you're working for a big company. You're not looking to jump into the owner's box just so you can buy yourself another job. The most important thing we want to buy back is our time. So in order to do that, we have to buy a company that's established. So most of these firms are going to be $500, $600, $700,000 and north of that. Now, first of all, I want to be clear about something. You can buy all of these firms that we're talking about for $0 out of your own pocket. Here's the difference in that $500,000 range firm versus that $100,000 range firm. You are buying a job. It's more than likely a solo practice at $100,000, which means the day you buy it, you are getting all those clients. Who's going to do all those returns? The owner's going to want their money. Either you're going to go to the SBA to get that money, or you're going to finance it some way, or you're going to pay them over a period of time from the money that it's generating. Either way, there's going to be debt service. So you take $100,000 and let's say you're paying them maybe $40,000 a year from that $100,000 in revenue. Well, now you got $60,000. Are you willing to work 300 tax clients to make $60,000? And that's just after debt service. If you're at 100 minus the 40 in debt service, now you're at 60. I would love to be able to go find somebody that can do all this work for me. 60 grand might get you the right person. It might not be enough to find you somebody good and competent. And now, even if you do find somebody for that $60,000, what are you left with? You're left with nothing. 100 minus 40 in debt service minus $60,000 to pay somebody to help you out equals zero in your pocket. This is the problem with small solo practices. And let me tell you something. Maybe you already have some clients. Then you inherit all these 300 tax clients. And I've seen it happen to where people get so far behind. Maybe they're not able to make their payments. Maybe 30% of people drop off. Like, there's all these possibilities that can happen. And now you thought you were going to make $100,000 in revenue. It turns out you're only going to make 60. And now 40 of that has to go to debt service as per your agreement. And now you don't have enough to pay that $60,000 a year person. You can see how this starts to implode on you. This is the problem in trying to think small and trying to buy a $50,000, $100,000 block of business. There are people in my community that have bought accounting firms before they joined our community. And the whole reason they joined our community was like,
CJ, I bought wrong. I want you to teach me how to buy right. I bought a job. It took 2-3 years to climb out of this hole that I was in.
This is why it's a fallacy to think that less dollars equals less risk when we're talking about buying accounting firms. If you buy that $600,000, $700,000 firm for no money out of your own pocket. It's going to come with staff, systems, processes, all of that stuff. So now maybe there's a $600,000 firm. Let's say there's $300,000 in free cash flow. From that, you back out your debt service. Let's say it's about $100,000 a year. So you're still at $200,000. Let's say from that $200,000, you go and a $600,000 firm, you're probably getting maybe 3 or 4 staff members. But let's say from that 200 grand, I want to add another staff member at like 75 grand or something. Now I can bring home $125,000 in free cash flow after debt service, after all expenses. And I have added to my staff 1 additional staff member. So everybody is doing the majority of the work. And now I only have to be involved 20 hours, maybe 25 hours a week or so. This is it, guys. This is how you unlock buying your time back. This is how you go from trading your time for money to trading your value for money. There's no way I could have been able to manage 2,000 plus clients if I didn't buy staff, systems, processes, all of that other stuff. By the way, guys, if you want 7 deal breakers that would kill any accounting deal in a friendly yes/no flowchart, comment 7 down below and I'll shoot you over that link. It's great to have, keep in your back pocket. That way, as you're looking at deals, you can figure out, is this a good deal? Is this not a good? But this is the logical fallacy we run into when we think lower dollars equals lower risk. And unfortunately, when it comes to acquisitions, when it comes to buying a cash flowing business where you're not buying a job, that is simply not true. It is better and safer to buy something a little higher dollars, but it has systems, staff, processes, all of those different things. Hey guys, listen, if you're looking at a bunch of different firms out there and you're like, I don't know what I'm looking at, they send me information, I don't know if this is good, bad, whatever it is, I actually have a newsletter where I send out 1 or 2 SBA friendly vetted deals that I personally look at. And I go through the things that I like about the firm. I go through the things I don't like about the firm. I give all of that to you. You get 1 or 2 of these every single week right to your inbox. And that way you already know that this firm is SBA qualified. You already know the good, the bad, and the ugly about it before you ever even inquire about it. There's a link in the description if you want to subscribe to that newsletter as well. I hope this helps somebody out there. Don't make the mistake of buying a $50,000, $75,000 revenue solo practice when you can go out there and buy a mature firm that's going to bring you so much more cash flow and nowhere near as many headaches and stress. And remember, it's a cruel world, but we're better together. We'll see you later.